Hello to all traders and welcome back to another NFP engagement brought to you by Orbex. I hope you like the Orbex background this time around. We've had some modifications and thank you once again for joining us. So we'll be going through all the big events leading up to the NFP. We'll also be joined by special guest speaker Daniel, who'll be joining me shortly just as I go through all of the other opportunities and predictions. So thanks for joining. We've got the live chat going as well. So anything that you want me to cover that we won't cover or haven't covered already, please let me know. So I've been asking for predictions already from Julian. Thank you very much. So we're looking at the dollar mainly after it's been very volatile in the last week. We've had Jerome Powell and his comments saying that if NFP numbers do come in quite aggressively like they did last time around, over 500,000 new jobs being added, then they would probably start aggressively raising rates again to get the inflation down even further. But that remains to be seen. We're going to see what these new NFP numbers will be, predicted to be just over 200,000 new jobs added. So it will be a bit of a backseat number than it was last time around. But, you know, it was a big shock that 500,000 new jobs were added last time around. So as I said, we are just going through what the predictions are, but we just have to go through a quick disclaimer before we do that. I'll just share my screen just to let people know that we are just putting this on our own emphasis on our own predictions. So foreign exchange trading and investments in CFDs can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for everyone. And only risk capital should be applied. This webinar is provided for information purposes only, and no information contained here is constitute solicitation or other purpose for the purchase of sell or commodity, for security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee accuracy or completeness of any information or analysis supplied. So without further ado, let's get on to just a couple of slides, not to bore you too much. Just want to go through a couple of the last time around figures. And as you can see here, we are expecting just over 200,000 new jobs to be added as opposed to the previous 517,000 jobs. But don't forget, this 517,000 new jobs being added was a big expectation breaker, let's say, that it was about 250,000 jobs that were supposed to be added last time around, but it really punched above its weight there. Unemployment is expected to be stable at 3.4%. But if we look at the previous numbers here, we're looking at actual and previous from last time around. This number of over 500,000 wasn't achieved since July of last year. So we're looking, 8-9 months in the making of this. And it is really looking likely that we will start, inflation will keep coming lower. Speaking of inflation, the annual inflation has been slowing month after month, 7 months in a row now. Now it's at 6.4%. Can it drop any further than we saw the 9.1% in the middle of 2022? Is this going to keep on slowing down? Well, as you can see, we're coming down in steps. 8.5% was quite a big jump from 9.1%, but then since then we've had like baby steps since then until we got 7.7, then 7.1, 6.5 to 6.4 obviously is still a step in the right direction for America, but how much more are we going to get in that direction as well? And just to touch on the US weekly jobless claims, they jumped just above 200,000 after hovering for the last few weeks below that number. Nothing to worry about yet for the American dollar and for the economy, because it is quite a far step off of the 500,000 that it was actually, or the 1 million mark that we reached during the pandemic as well. So keep your questions coming. Thank you very much again once for joining me. And we'll just see what the other numbers are. As I said, don't want to bore you too much with the slides. Want to get right into the markets, into the charts to see what the opportunities and predictions are. So retail sales, just want to jump on that as well, because they were, they jumped pretty well out of negative territory back up to 3%. And as you can see, the last couple of months were hovering dangerously in the negative territory range. And even before that, we did get a couple of numbers in the negative territory. So this is something that we're looking at as well. But private businesses were up quite nicely from the downturn that we saw in the previous reading as well. So I just want to, sorry about the black screen there. So let's get right onto the charts then. We'll just share my screen for the chart. So sorry about that little delay. So, Nikhil, as usual, thank you very much for joining me again. And we're looking on gold, which that's the first market we just want to look at the moment. So I just want to bring it back on the daily chart for gold, because what's been interestingly enough is since we've had this really big downturn on gold since the last NFP numbers, as you can see here, since we had the last NFP reading, we were trading roughly about the 1950. That dropped right down to well, about $80, $90 to the mid 1800 range, smashed through the 1900 barrier. Now we're trading approximately at the 1835, 1830 area at the moment. So what we're going to be looking at in the near term, at least for me anyway, is to get past this pretty downward um, channel that we've been witnessing. So 1850, 1860 is the next leg to the upside that I would see for finding some firm resistance. That's roughly about $25 away. $25 obviously is not a lot of movement or activity in a given trading session. As we've seen before on gold, we've really been moving quite drastically up higher and lower. If you just, as I said, take the last NFP numbers that we saw, we fell quite significantly at the beginning of February, and as I said, broke the 1900 handle. 1900 handle was a lot of economists' big support, because that was the last time we had this particular number here. But sorry, particular support here. But as you can see, smashed through that. We had a slight channel movement to the upside here, but that did not last very long, as you can see here. And then we had another break. And as you can see, downward spiral, slight correction, downward spiral. We've had a bit of an uptick since then. But as I said, this is the next resistance line that I'll be looking at in the near term at least. And then we can see if we're going to start moving higher as well. It has been bouncing quite nicely in the near term for gold. We've seen a shift of roughly about $20 to $30 in the last few trading sessions. So it is a bit optimistic that gold will start moving towards the 1850 handle, possibly by the end of this trading session. Don't forget, America is just opening now. We've got the NFP results coming shortly in just over 20 minutes time. So with that being said, are we going to get another move higher? Well, as we said at the beginning of the presentation, Jerome Powell did state that he will most probably start aggressively raising rates once again. Probably not the 75 basis points that we saw for the majority of 2022, but most probably 50 basis point hike if we do get some strong NFP numbers. And if that's the case, what will happen to the dollar? Will we see another push to the downside for dollar across the board? And not only dollar, gold as well. That's bouncing off quite nicely. So we'll just have to see if that's going to have any significant bearing on the process as well. So looking at gold, we'll go into the hourly chart as well, because excuse me. Most interestingly enough, as you can see here, we've had this collapse on gold in the last couple of days, and that's gone over nearly $40. And not only is it quite significant, this drop on gold, that we've had this consolidation, but now we're starting the V-shaped recovery. For every drop or for every push, there's always this support area, and then there's the move to the upside as well. So now we're just looking to see not if, but when we're going to see the 1850 barrier being tested once again. It is looking likely that most probably by the end of today's session, depending on the NFP results, or by early next week, we will see another shift to the upside. Now we're in a bullish territory. As I said, for every big downshift, you probably know yourself as traders, or upshift in the market, we do get that reversal. We get the breaking zones, we get the support and resistant areas, and then we start moving higher or lower depending on which way the market was gone previously. For this particular example for gold, as you can see, it's moving lower, 40 to 50 dollars to the downside. Now we're moving higher. So it's a nice V-shaped recovery that we're looking at in the near term as well. Okay, so any other markets, please let me know what you want me to check out. We're looking on euro dollar as well, because euro dollar has been quite predictable, I would say, because in the near term, as you can see, for most of 2022, we've had this downturn. We broke parity once again. Just put it in roughly here so we're not wasting too much time. It's roughly about here. Then we had the big bull run. We've had obviously resistance zones, and now we're going into a correction. But how much of this correction will keep on pushing lower? Obviously, it's a fully fledged bearish correction now, but we could find some support soon because, as you can see here on the 4-hour chart, I'll just bring you, we are seeing some slight signs of a bit of support roughly around the early to lower 105 area. So with that being said, are we going to get this bounce that a lot of economists are thinking about? And are we going to see more resistance roughly about this double top here at the 107 handle? Very, very big psychological area, 107, because it's the last time that we had this big swings high. And also, as you can see, the choppy nature of this movement to the upside is really starting to become quite apparent now. So this is what we're looking at in the near term as well. But let me know what you're looking at yourself until I guess speaker Daniel comes on. I've had a few clients asking me about Bitcoin as well because of the collapse that we've seen recently. So I want to bring a daily chart just quickly because I know Bitcoin's a bit of a mixed bag. We don't get a lot of requests about it, but for those clients that are trading it, just want to go through it quickly. Since we've had, the reports that, with the news with the SEC and Kraken and these kind of things, there's been a big sell-off in the Bitcoin and cryptocurrency industry all around the board. But on the daily chart, if you look at these big moves, it's not something out of the ordinary that, it was at 22,000. We're moving over $1,000 off of Bitcoin at the moment. But as you can see here, when there's a gap in the market or there's a big push in the market, we're always looking for it to reverse and cover the gap. And that's what's now. So this was quite a big move and predictable move in the market as well. So this is what we're looking at in the near term, that it was predictable that we were going to cover the gap and then start moving lower. How low will it go? Well, as the saying goes, we'll see if we start moving back down to 16,000 territory. So I've got Daniel online at the moment. I'll just let him in. And
Oh, hey,
hi,
is
Daniel.
my microphone working? I got a new headset. The other one kind of
Yes,
didn't make it.
I think we can hear you loud and clear. Thanks for joining us again.
Awesome. Sorry, I'm a
Great.
bit hoarse. I went to a horse farm and turns out it's a little bit contagious.
It's a bit contagious, yeah. Hopefully, you won't start making any other noises until until the end of
Yeah.
the NFP. So, just been telling our viewers about the big moves in the market. Obviously, the big headlines for the last week or so was Fed Chair Jerome Powell's comments. He had two testimonies to give last week. What do you feel going forward for the Fed? I mean, we've just touched upon. 1 minute they're tightening their monetary policy, then they're going to probably be expanding it a bit, and
Yeah.
it's all basically based on the data, isn't it, that we should probably be getting out?
Yeah, I mean that's definitely what the Fed wants to communicate. Is we should be paying a lot more attention to the data, but also the Fed is kind of running into a little bit of credibility issue here because they sort of gave the idea that at the last meeting that was they're getting close to a pause. It was Powell who said that there's a couple more rate hikes coming and that's about it. And then now they're sort of communicating that they're going to have to re-up the ante and start going at a higher pace. So it kind of gives the impression that they miscalculated where inflation was at the last meeting, because they started saying, well, we're getting near the end of the terminal rate and we're going to start pausing. And then now they say, well, now we have to start hiking. And so people are sort of like wondering, well, how good is their hand on the pulse of the economy, and whether because they're predicting that there won't be a recession,
Mm.
and that was partially based on sort of the expectation that they wouldn't hike as much as it seemed to be as they're going to be hiking now. So it does end up having a little bit of makes the market a little bit more uncomfortable, I would expect. And of course, an uncomfortable market means one that's not all that happy about taking on risk.
Exactly right. So, I mean, like you just touched upon, we've had this kind of like unpredictability about the Fed, and obviously
Mm,
they're losing a bit of traction when this time last year it was 75 basis points for sure, like each time. But
yeah.
now it's, they were supposed to slow down 25 basis points. There's a word of 50 basis points going to be happening at their next meeting. So, when you say losing confidence in the Fed, does that mean a bit of a rocky road for America as we head into the second quarter, would you say?
Yeah, that does seem to be kind of the problem because, well, I mean, according to the Fed's own economic theories, that the way to control inflation is by giving people an expectation that they're going to be able to control inflation. So it's all
Hmm.
about where people expect the inflation to be. And so if the Fed is sort of kind of wishy-washy on how many rate hikes they're going to be and where the terminal rate is going to be and how much hiking they're going to do or how much hiking they're not going to do, then this sort of doesn't lead to is good expectation. Expectations also kind of end up being a little bit shaky. And then according to their own theory of the Fed is that this would lead to potentially higher inflation. So
Hmm.
the fact that the Fed is kind of doing this according to their theory ultimately it sort of kind of leads to the notion that the economy might be it might lead to inflation going higher than they want to, and that might mean that they will have to raise rates at a higher rate in order to sort of so-called recover credibility or to
Hmm.
re-anchor. I think the term is re-anchor expectations. I think is the term that they
Yeah.
use. Now, of course, that's a
Well,
theory. Uh,
exactly. I
how
was,
is that going to play out?
I was just going to touch upon something you mentioned as well, because the terminal rate was supposed to be roughly about 5%, and now they're saying, oh, it might even be 6% now, because they want
Yeah.
to try and keep on going until this inflation comes down to their key level of 2%. But I don't think realistically it's going to happen this year, is it? To get back, it's at 6.4%, I believe, annually, and they want it down
Yeah,
to 2%.
and
So
the going down portion has started slowing down. It's kind of like flattening
exactly,
out. Yeah.
yeah,
Oh yeah.
exactly,
The other
yeah,
thing is sort of like there's a lot of things that are kind of going back to where it was like several indicators that are going back to the 1970s, like the first time certain things have happened since the 1970s. And so this is
yeah,
getting people a lot of worried because at the end of the 1970s, early 80s, what the Fed had to do was raise rates above the inflation rate in order to get the inflation rate under control, and that led to a recession. And so the question is
exactly,
are they going to do that this time?
yeah, exactly. Well, it's funny you should mention that, because we're just looking at the inflation rate as a whole for the annual status, and going from 9.1% only July last year, or June, July, in the middle of the summer, to 6.4% at the moment. It is a good gradual decline, but now, like you said, we're going in baby steps. It was
Yeah.
6.5% before, 6.4% now. So this 2% target, it's a little bit unrealistic, would you say? And is it going to cause more tension between traders, economists, the Fed, all these people, Wall Street in general? We saw how the Dow and the S&P sold off a bit in the last couple of sessions. So is this something of a sign to come for the next few months ahead?
Yeah, it does seem to me that though, not agreeing on what's going to happen is kind of like the thing for the economists.
Yeah,
If all the economists start agreeing on something, you should be probably worried because that's very unusual. Um,
exactly.
yeah, but yes, I mean, even the Fed itself acknowledges that getting down to 2% this year is kind of pretty unrealistic, and there's a bit of concern that it's easy to bring down the top end of the inflation when it's really high, but then to get that last bit is going to take a lot more effort because
Yeah.
the higher end of the inflation was sort of pushed by these highly volatile elements, particularly energy, and
Hmm.
that's mostly because of the war in Ukraine. And so then it's
Yes.
been a year now, more than a year, so there's been time to start adjusting to the new reality and bring get more efficiencies and or bring more production online, etc. And so then it starts balancing out, and so then you can that the price will come down on the energy aspect, or will start to normalize, shall we say, not necessarily come down all that much.
Yeah.
But then that's still filtering through the rest of the economy in increased costs for transportation, increased costs in logistics, and all that other stuff. And then that keeps pushing the price up. And then you sort of have like the knock-on effect that you have the increase in um, in interest rates raises the cost of borrowing money to buy a house, which means that the amount of housing the available housing goes down, which means you have higher competition to get the housing that is there. So then you can have an increase in shelter prices. And so it's sort of like, even though it looks we're getting good figures now, you can then have a rebound in it's sort of like the next step of where things go in terms of prices, because
Yeah.
first energy means that transportation is more expensive. Transportation is more expensive. Then the things that require a lot of transportation, those are going to become more expensive. And then the things that are made out of that stuff that requires a lot of transportation, then that becomes, it just keeps on going.
It's a big merry-go-round at the moment, then
Yeah.
basically to come up.
Yeah.
I just wanted to pick your brains a little bit on the last time around that we had the NFP, because we had such a big
Oh yeah.
exceeding expectations of over 500,000 new jobs being added.
Mhm.
We're having a little bit of a subdued one, would you say now, because it's just the predictions are just over 200,000, but it's still a decent jobs number though coming in, because if we forget the fact that we did have our expectations broken last time around, it's
Yeah,
still
that's
not
a
a
big
bad
surprise.
yeah, exactly. It's still not a bad jobs number, would you say? Especially if the unemployment rate is expected to stay at the same time around as well.
Yeah, there's definitely some kind of significant distortion going on in the in the labor market in general, which is leading to sort of surprises that are really hard to predict.
Yeah.
That all the analysts are getting it wrong kind of consistently when it comes to the jobs numbers.
Hmm.
But one of the things is, like last time, there's this huge surprise because there's things that were happening that were a little bit outside of sort of the normal functioning of the economy. Like you had 74,000 jobs that they weren't jobs that had been lost because they were people that had been put on standby as part of a labor dispute that they had in California with related to education. And so
Hmm.
then when that was resolved, they came back and then they were put back officially on the payroll. And so then you suddenly get 74,000 on top of the 200,000. So that explains part of the surprise. And of course, we probably won't get that this time. But again, they're predicting over 200,000 anything over 200,000 jobs is in normal times considered pretty good.
Hmm.
And as you point out, the thing sort of like really pointing out is the unemployment rate expected to stay at 3.4%. That's sort of keeps
Exactly.
coming back down to that level, which is like the lowest it's been in like 50 years. And so
Yeah.
that means the labor market is really tight, and the Fed is probably going to be worried about that. They're starting to
Mm.
talk about it more. We can see it, in the minutes. And then I think it was even Neil Kashkari, who's like the dove of the doves, and he was sort of like saying, "Yeah, hey, the unemployment is the employment situation is becoming a problem." So it might actually be that the Fed will start paying more attention to the unemployment numbers, and the NFP could have a bigger impact than inflation
Yeah.
at the moment. So that's why we could probably, even if the NFP comes in within expectations, it could still be a pretty strong reaction in the market. Particularly, they're a little bit nervous because of the Silicon Valley Bank getting into trouble, and Silvergate, essentially going belly up. And so
Yeah.
there's a lot of tension in the market. Says, I think is the word they used.
There
And
seems to be,
yeah,
yeah, because just adding on to that, if we just take a look at the chart at the bottom, like, for the last few months, it's been roughly hanging around the 300,000 mark, just over or below. But then when you have this big 500,000 new jobs added, it makes sense what you said about, not being a realistic figure on new jobs being added
yeah.
in the market as well. So this is something a lot of traders, I think, have to, and the Fed as well, has to just keep an eye out for as well, would you say?
Yeah, the Fed is going to meet not this coming week, but the week after, if I remember correctly. So that means they're going to be going into their blackout period soon, right
Hmm.
after, I think, right after the inflation numbers. So it's sort of like there's a whole bunch of stuff coming that could influence the Fed, and then silence for about a week, and then you get the Fed meeting. So you could have quite a lot of movement now, and I guess starting next week.
Exactly, and movement is always good for traders looking to
Yep.
jump on opportunities as well. So I just want to quickly look at the charts before we go live with the NFP, roughly in about 5 to 6 minutes. So I was just talking to the traders just before, and on the euro dollar especially, because for the vast amount of 2022, since we saw this 75 basis point hike, we saw the euro dollar pretty much collapse. The dollars was very strong across the board. But since then, we've had an uptick in not only euro dollar, but cable as well, pound dollar, and other dollar correspondence. But in the last from the last NFP reading, since we
Uh-huh.
got these big job numbers, which was when we saw this decline, we saw you know a strong dollar and a weak gold as well. So if we just bring the gold chart, I just want to bring the gold chart up as well because we're just checking that. So this was the collapse on gold. This is when the NFP data and the PMI data was released this time last month. So over $100 has been shelled off gold. We've had, on the other hand, as well, forex pairs really started pushing in the dollar direction in the last few weeks as well. Do you see possible parity levels again on euro dollar? Is this something
Ooh.
you could? Yeah, because I was just thinking, I've been speaking to a lot of economists in the last week or so, and they've said, well, the fact that since we've seen roughly you know, over 400 pips moving off the euro dollar currency, could it go another 400 pips to parity? I mean, or is that a bit unrealistic?
Well, I mean, it is. It depends on how much sticking power essentially the Fed and the ECB have, because
Mm,
the way it is now, the, the general idea is that the ECB isn't going to be as aggressive as the Fed. So
yeah,
before you had that sort of move, because the idea was that the Fed was getting to the end of its hiking cycle, and the ECB still had to do some more hiking. So up until quite recently, the expectation was that the Fed would hike till about 5.5%, and then the ECB would get to about 4%. And so
hmm,
you'd end up with that 1.5 or 150 basis point difference, which would leave the euro a little bit weaker, but still stronger than it was back when the difference was wider because the Fed was hiking at 75 and the ECB
yeah,
wasn't doing anything, right? But now the question is the Fed going to keep hiking? Because that's why you get the reversion, because that large non-farm payroll numbers started put the idea that the Fed might hike by 50, and since then it's just the number of people expecting the Fed to hike by 50 at the next meeting has been just going up, except
yeah,
for, well, starting yesterday because of the SVP thing. But that's been sort of like the trend. So now the question is the Fed actually going to follow through with that? And then that's going to probably depend on the data that we get, well, in a couple of minutes,
exactly.
and also next week. And then the question is whether the ECB is going to really take on inflation, because Europe has had the highest inflation on record, was just reported last month. But then, of course, record starts, with the euro, which was, only a couple decades ago, which is kind of different
Yeah,
than other currencies. But still, it still does make a headline. And so since the ECB might be in a similar situation that the pound, or that, sorry, the BOE was, where the Bank of
yes,
England was hiking a little bit. There are just like 25 basis
just a
points,
little
25,
bit. Yeah, yeah,
and the inflation, it wasn't enough to like really kick inflation and start to go down, as we can see with the Bank of Canada and also with the Fed. They were much more aggressive and they got inflation to turn around, whereas these other banks that have been sort of nibbling at it haven't had that success. And so um, maybe the ECB will pull another 75, but everyone's sort of like expecting very unlikely. And if that's the
yeah,
case, you could have inflation going up, which means that real rates in Europe would be lower than the United States. And if the ECB, and sorry, if the Fed keeps going aggressively, then yeah, you could probably get a return down to parity. But
hmm,
it depends on a sort of politics, in the sense of the politics of the people who run the central banks. And so that's trying to guess what a couple of people are going to think more than look at the data. So it's always a lot more, there's more uncertainty there.
yeah, definitely. Just another thing to touch upon. We've also got unemployment and data for Canada as well.
Oh,
So
right. Yeah.
it's always exciting when the Canadian news is at the same time, unemployment rate, full-time employer participation rates, annual average hourly wages, and things like that for Canada, because you get more of a move in the market, especially on the loonie or the dollar CAD, as a lot of people know
Yeah.
it as. So yeah, very exciting times at the moment because it's very unpredictable as well. So we just got another 10 seconds before the data comes in, if my clock is
Okay.
correct. Hopefully it is anyway. And so as I said, we've got non-farm payrolls, 205,000 new jobs expected. So we'll just see what the consensus
Data
is.
says, well, you can
It's just
probably
coming through
guess how
now.
the with the market move.
311,000 new
Yeah,
jobs. So a little bit above expectations. So
but not huge amount.
not a huge
Like,
amount. we're seeing a few of the currency pairs moving in the opposite direction of the dollar at the moment. Could this be a worry that
Well, yeah, there could be
for the
sort of like
Fed?
a problem there where the Fed hikes, but the economy isn't doing good enough. Like if you
Yes,
had a really blowout number, then yeah, the Fed is going to hike, but also the economy is doing really well. But if you get a number that isn't so good and the Fed hikes, then it might
yes.
be a little bit more shaky. Yeah.
Just notice that unemployment rate jumping to 3.6%. So that's a
Ah,
little
yeah,
bit of a negative adverse reaction, isn't it? That could be a
yeah.
factor.
It's probably the unemployment rate, because this of course is what the Fed is going to be even more concerned about,
Yeah,
is how tight the economy, how tight the labor market is, and whether it's going to be pushing up wages. So if you get the unemployment rate going back to where it was before last month, it was at 3.6% in December, so then that sort of relieves that little bit of pressure, and so maybe the Fed won't be talking so much about the unemployment number this week.
they'll have something different to talk about at least. That'll be
Yeah.
something. For the board. So we're just seeing at the moment, not too big moves in the market. We've seen gold jump up roughly about $5, not too much in the way of a big move there. It's getting a little bit of resistance at the 1840 handle. Just jump onto euro dollar because that's where a lot of our traders like to trade as well. So that's not, it's moving roughly about 30 to 40 pips at the moment. Not too much of a big move. So we're just waiting to see now for me that the euro dollar is, if it's going to continue this slight bull run that we've seen over the past few days, where it's gone from finding a support in the mid 105 range, now just tipping over 106, so just over a few pips there. I mean, so with this being said, Daniel, 311,000 jobs at the first number that we've seen, it could be slightly changed as we go into the week, but 3.6% on unemployment rate, average hourly earnings just dipping slightly monthly at 0.2%, up slightly at 4.6% year on year. Do you see any good tangible things to come out of this NFP? I mean, okay, we've got an extra 100,000 new jobs being added, but it's not really reflecting on the charts that much, is it?
Yeah, it's again another one of those component things, I guess, because you have the death adjustment accounts for 176,000 of it. So if you
Yeah,
take that out, it comes out to be what, 150,000,
yeah.
which is a little bit below expectations. And then the prior month was also revised lower by 13,000. So
Hmm.
it seems like it's sort of, it's a little bit like when you factor in all the expectations. I mean, they factor in all the different components, the unemployment rate going up, it's kind of like a little bit lower than was anticipated. And
Hmm.
so, because the real worry was that you get the jobs number going up, and then that would basically confirm that the Fed is going to hike by another 50 basis points. But since it's a
Yeah.
little bit, these other things are kind of like, maybe it'll shift back to being 50-50. And then,
Hmm.
but then that's going to put much more weight on the CPI data coming out next week to see what the Fed is going to do too.
That's true, yeah. And just one word I wanted to pick up that you said earlier about recession. Do you think America's going to pretty much avoid the recession now because there's less and less talk about it, isn't there? If we rewind maybe 6 months ago, a lot of analysts were saying, when we get into 2023, for sure the first or second quarter, America will experience some kind of recession. But it seems to kind of just be treading water a little bit. It's just still breathing okay, let's say.
Yeah, it seems like the expectations of recession keeps getting pushed a little bit further forward, a little bit forward, and then eventually it's going to be, well, it's been pushed forward enough that it didn't happen in 2023.
Yeah.
It's still, the problem is there's so much distortion in sort of like the normal market, because you have all the leftover open jobs from the pandemic they're still floating around. You have this large
Hmm.
amount of spending that the government is doing. You have still the high inflation, and
Yeah.
all that could sort of, it doesn't lead to your traditional understanding of the data. So um, like previously, when everyone was talking about there being a recession, I started to suspect that there wouldn't be one. But now that
Yeah.
they're no longer talking about a recession, I start getting back to suspecting that there might be one. So
So 2024 maybe we'll just
yeah,
skip.
yeah, that's the other thing. But it's still, there's still a lot of pressure. There's still a lot of reasons why there could be a recession, but it's not like it's confirmed essentially. So the same reasons existed previously, except it just sort of like it hasn't happened. So It's still possible. I would still say there's still a high is highly likely, but the Fed might still be right and it could end up avoiding a recession.
Hmm.
The other thing, it might be kind of like a technicality. So instead of having like a full blown recession, it might drop down to say minus 2.2, minus 0.3, or it might
Yeah,
be at 1.0, like what Europe is having, like with flat zero, and so that is still technically not a recession, but high inflation and zero growth is still a very uncomfortable position for most people. So a lot of
yeah.
people might sort of feel like they're in a recession, even though it technically doesn't meet the definition of one. So that could be another factor.
Well, yeah, and you've got the global factors as well. If you think about coming out of a pandemic after 2 years, and then we've got the Russian-Ukraine conflict that pretty much
Mm-hmm.
started immediately just as the world is getting over the pandemic, you have to think what else could happen this year that could globally affect a change in risk appetite or what traders are looking at as well for the next well, where are we now, March, so the next 9 months.
Yeah, well, I mean, it's like yesterday you had that sort of it's not really a run on the bank, but it's like close to a run on the bank in Silicon Valley.
Yeah.
That could be sort of like a little canary in the coal mine kind of situation,
Hmm.
because but then it also could be like a repeat of what happened with the so-called mini budget that became infamous last year,
Hmm.
when the pound nearly crashed,
Yeah.
because it exposes a weakness, and then it gets the central bank steps in, and then it sort of gets covered, and then everyone sort of forgets about it. So it could be another one of those situations, or it could be sort of like, hey, actually, you know what? All the banks, there's like $600 billion in unrealized losses that these banks are holding on to their portfolios.
Hmm.
And so if people start pulling out their money for some reason, then they might be forced to sell, and that could cause a significant problem. So but then, know, it might be just a warning sign, then that goes and passes, or it might be the start of other problems that might happen in the future. So,
Yeah.
you know, you, you can't predict the markets
Just
100%. So,
watch this space then, basically, for now.
exactly, pay attention to the data and
Exactly.
read the articles.
Yes. Okay, Daniel. Well, thanks for lot for joining me this time around for the NFP. It's been
Hmm.
quite eventful, not as eventful as last time around, but at least we've had some
That's true.
moves in the market, and we're seeing some retracements now on a lot of the pairs and gold as well. So I'll take our viewers through the next chart opportunities, but I just wanted to say thanks for joining me, and
Thanks for the invite.
no problem at all, and we'll see you again next time.
Okay, take care.
Take care, you too. Bye for now.
Bye. Bye.
Bye. Okay, so I'd like to thank Daniel for joining me. So what we'll do is we'll look at the opportunities now going through the next few trading sessions. So, euro dollar, we've got it on the 30-minute chart at the moment. So we're just looking now at this bullish run to continue. We've got a nice 40 pip move to the upside that's pierced the 106 handle. But as I said, we're looking nicely recovering at the moment. So we've had this downshift for the last couple of days. We're going on a slight angle now. It's not an exact move to the upside like we've seen here when we saw this collapse in the last few sessions. But now we're just seeing this slight recovery on the euro dollar. And if you look on the pound dollar as well, you see the same thing. Sorry about that. So you see the same thing, that this is more of a seismic shift upwards, that this is looking to complete this V-shaped recovery. So for me, we're just looking to see if we're going to reach this double top here, roughly about the mid 120 area. Piercing the 120 handle and moving higher was a very good bullish move, but we're just looking now to see if it's going to keep on pushing higher. So we'll see if we get that status by the end of the trading session, and we'll keep you posted on that as well. Dollar CAD was something we didn't get to look at the moment because things were happening quite significantly. But as you can see here, with the balance of trade data that we saw last week, or this week, sorry, and also the Bank of Canada holding its interest rate for now, we're seeing that it's a bit of a stronger dollar emphasis than there is on the Canadian side. But as you can see here, we're moving nicely in the realms of a move to the upside, and then we've got a slight correction, another move to the upside, and now we're having this other slight correction. So these wave after wave, we're expecting some support here before we have another move higher to test this particular region, roughly about the mid 138 handle. So this will be a very good opportunity for me to put some bids in, some buy positions, and see if we can put possible take profit here, just to make sure that we're not losing any good opportunities there. But yeah, if you've got any questions you'd like to ask, please keep them coming. Gold, just one more time before we close. As I said before, looking to get past the 1850 handle. For me, another $15 move to the upside will signify that we will start testing these previous highs that we've seen not so long ago. This is a case of, buyers' appetite. If we're going to keep pushing, if the Fed is going to keep weighing down on monetary policy, we're going to get the next signal for the Fed this month to see if they're going to start raising rates quite significantly. If they do, then we could see what we saw pretty much the most of 2022, which was this kind of direction, the gold moving higher as the Fed really started to push its monetary policy. So this is something we want to emphasize. As you can see here, from the sell-off that we saw in the last NFP, it hasn't actually occurred this time around. We've had roughly about a $10 move at the moment for the whole day, but nothing in the realm of what happened at the last NFP. So quite significantly, there is no sell-off this time around. US dollar and yen at the moment, dollar yen pair, we're seeing quite a big move in the market at the moment, roughly about 80 pips, but that was expected to retrace slightly because guess what? We've hit some support. And with that, it's a very nice area to start putting bids in and market, we're expecting probably dollar yen to start retracing half of that at the moment. So this is something that we're going to look at in the near term. Very good opportunities there on the dollar yen because, as I said, every time we get this kind of V-shaped recovery from the last move higher, just zoom it in so it's a little bit easier to see. Every time we get this move to the downside, there's always this support, and it was pretty obvious that we will probably start finding a bit of support there because it's just how the market is usually working when we're trading as well. So as I said, let me know what you're trading on. The Dow, now the Dow is something that we wanted to keep an eye out for because S&P, NASDAQ, the Dow, it's had a very big sell-off in the last couple of days, and it's expected to recover slightly, but because we've pierced and gone through the 33,000 handle and then the 32,500 handle, we're now seeing that the support was, well, the next test was 32,000. And as you can see here on the chart, I'll just zoom it in, 32,000. Again, I won't put it in exactly because I don't want to waste too much time. But as you can see, nice support at the lower end of 32,000 here. So this was quite a predictable move because every time we get these psychological levels, we look for the next support or resistance, depending if the market is moving higher or lower. In this case, market moved lower, collapsed quite significantly, hit support, nice psychological level at 32,000, and now we're moving higher. So this is something we're going to keep looking at towards the end of this trading session and as we get into the next one as well. And finally, on Bitcoin, we were just looking on that before Daniel came on board. So we're going to put it back to the daily chart because, as I said, not only have we covered this gap and started to move lower, we've not only covered the gap, we've pierced it as well, even though we have retraced it. But now it's opened up room to start moving 18,000, 17,000 and back down to where the bottoms were at the back end of last year, the Q4 lows of below 16,000. Sorry. So this is something else we're going to be looking at in the near term and waiting to see if that's going to have any impact on the market as well, because since Bitcoin is now a tradable CFD, we've had a lot more volatility and a lot more of things to talk about as well. So tell me what you think. Let us know on our Telegram and on YouTube channels as well. Feel free to ask us any questions about the markets going forward. What do you think of the Fed's decision to possibly start aggressively raising interest rates again to get this all-important inflation back down to 2%, currently at 6.4% on a yearly basis, annual basis. And where do you think gold is going as well? Is it going back up to, well, Is it going back up to 1900 anytime soon? It's still got quite, well, $80, not 80 to $90 to go. Sorry, $60 approximately to go until that happens. Not out of the ordinary, but is it going to get back to where it was before the last NFP reading, which was roughly about 1 month ago? So let me know what you think. Obviously, gold traders, Dow traders, dollar traders, we have all of our economists asking the same questions. Where's the dollar going to go for the next few months, especially with the Fed thinking that the NFP numbers and the PMI numbers are going to be very good in order for the monetary policy to continue. So this is what we're looking at the moment. So thank you very much for joining me on this NFP. As I said, lots to talk about as usual, but not like the previous NFP where we saw 500,000 jobs being added. We're just seeing now just over 300,000 jobs being added, but a very good jobs number regardless. And we're seeing now that the markets are really starting to pay attention to the Fed, because they're going to be the ones giving signals and direction to the dollar in the next few months to come. So as we exit the first quarter of 2023, the next NFP will fall into the second quarter, and obviously we'll have earnings season coming up for that. We'll also have the next Fed monetary policy as well, the next interest rate decision. So lots to talk about in the next time around, and we'll see what's in store. So thank you very much for joining me once again, and have a great trading day ahead. Have a great weekend ahead, and we'll speak again next time. Bye for now.